This is the AI Newsflash for May 5th, 5 p.m. UTC. First up, Anthropic launched 10 finance-specific AI agents today, May 5th, deepening its push into banking and insurance enterprise markets. On the research and client coverage side, the lineup includes Pitch Builder, Meeting Preparer, Earnings Reviewer, Model Builder, and Market Researcher. Finance and operations agents cover Valuation Review, General Ledger Reconciliation, Month-End Close, Statement Audit, and KYC Screening. Available as plugins in Claude Cowork and Code, or as managed agents on Claude Platform. Microsoft 365 integration covers Excel, PowerPoint, and Word. 8 new data connectors include Dun & Bradstreet Fiscal AI, GuidePoint, and IBISWorld. Moody's released an MCP app providing credit ratings for 600 million companies. Claude Opus 4.7 leads the Val's AI finance agent benchmark at 64.37%. Citadel, FIS, BNY, Carlyle, Mizuho, and Travelers are among customers, marking a clear shift to commercial-scale agentic AI in financial services. Second story, JPMorgan Chase CEO Jamie Dimon publicly blessed the trillion-dollar AI capital expenditure boom by hyperscalers, according to Axios reporting. Backed by JPMorgan's strategic relationship with Anthropic, Dimon framed the massive AI capex not as overinvestment but as structural competitive spending. Big Four hyperscaler AI capex tops $725 billion and is set to expand further next year. The endorsement from Wall Street's largest bank chief partially eases investor concerns about AI spending sustainability. JPMorgan has rolled LLMs out to 200,000 employees, positioning the bank as a frontline AI integration case study. With markets questioning monetization of NVIDIA in hyperscaler mega investments, a top financial industry endorsement reframes the debate, potentially reigniting capital flows into AI infrastructure plays. The third item, Altara, an AI infrastructure startup for physical sciences, raised $7 million in a seed round led by Greylock, with Jeff Dean and OpenAI and AMD leadership participating as angels. Targeting semiconductors, batteries, advanced materials, and specialty chemicals, Altara builds AI infrastructure for multimodal scientific data scattered across legacy systems. The platform automates analyses that previously took weeks of manual work. Co-founder Eva Tueke comes from Fermilab Particle Physics and built Starlink at SpaceX. Catherine Yeo developed coding agents at Warp and conducted AI research at IBM, MIT, and Harvard. Rather than applying general-purpose AI, Altara targets domain-specific scientific data challenges. Customers are already integrating it into core technical workflows, signaling a new wave in AI-driven scientific discovery for physical industries. Fourth story, the Wall Street Journal reports that higher costs are dramatically raising the profit bar for AI companies, exposing margin pressure across the industry. Cloud compute, HBM memory power, and cooling infrastructure costs are climbing in unison, pushing the revenue scale required for AI services to break even far above original projections. OpenAI projects $280 billion in 2030 revenue, but cumulative cash burn of $112 billion. Anthropic raised prices. Silicon, memory, and energy costs are all rising, continuously eroding AI unit economics. In contrast to Dimon's optimism, mounting structural costs risk extending payback periods for AI capex. Investors now face a new phase, demanding scrutiny of AI margin structures rather than user growth or top-line revenue alone. And that's all for this AI Newsflash.